Hi there, and you watching ET Now. This is your trades with me, Shail D'Souza. Along with me, I have Snehi Shah. Very good afternoon to you, Snehi. And if you look at the markets today, actually, they've done absolutely nothing but a lot of stock-specific action, lot of news actually making headlines.
Absolutely, Cheryl. A whole host of counters to watch out for. It's been an exhaustive day for us and for the markets as well. Let's take a look at what the top buzzers today looked like. You had Nifty gainers, losers, equal share coming both ways. Nifty not doing much, but Maruti Suzuki, one of the top buzzers today on the back of its earnings, just came in a few minutes before markets closed for the day. Sharp spike coming in on the stock on the back of its earnings as well. Lots of other stocks also to watch out for on the back of their earnings. You had M&M, Ambuja Cement, Birla Soft, mixed set of numbers coming in from all of these, some good, some bad. M&M, there you see it, a slight bit of a fall came in the stock price. A little lower is where that stock has ended. Birla Soft, deeply under pressure on the back of a poor set of numbers, 5% lower almost in today's trade. That's Birla Soft. Let's also pull up an Ambuja Cement and take a look at how that panned out over the course of the day, because numbers for Ambuja Cements also came out today, and almost 1% uptick coming in on that front as well. Your Godrej Properties also coming out with its numbers today. A flip-flop session of trade coming in for that counter as well. A whole host of other counters, in fact, that came with its earnings. You had Z, Asahi, you had Rights, in fact, owners, it announced a bonus issue as well in the ratio 1:1. Heidelberg Cement, you had lots of other companies coming out, KPR Mills, Z Entertainment, like I mentioned. Lots of other companies coming out with their numbers. So it's been an earnings-heavy day for us as well. But we'll talk about the markets a little later as well in detail. Let's talk about the big news of the day, and that was Gadkari writing to FM Sitaraman on the withdrawal of GST on insurance premiums. You had a whole list of insurance stocks also abuzz on that news. And lastly, we'll also be keeping a very close eye on earnings, the likes of Tata Motors, ITC and Zomato, some of the top stocks that will be buzzing in tomorrow's trading session on the back of all of these earnings. But with that, Cheryl, also take us through what the deal looked like today.
Absolutely, a lot of stock-specific action, like you mentioned, Snehi. A lot of counters actually are reacting to their numbers. But let's talk about the markets and what did the benchmarks do in today's trading session. If you look at Nifty, it actually ended in positive territory. Very range-bound trading session, as we've been seeing over the last 2 to 3 trading sessions. So fourth day of consecutive gains coming in for the benchmark indices. You have Nifty that has managed to shut above the 24,950, still elusive of the 25,000 mark on the Nifty, but nevertheless we are still holding on to gains. That's a positive trend. So you had mid-cap indices and the small-cap indices, both of them actually seeing a divergent move. While you have mid-cap ending in the positive territory, the other hand, you had small-cap index that actually paired all of its gains, and it actually ended in the negative territory. So a divergent move coming in for the broader markets. Metal index was among the top sectoral gainers, seeing uptick of about 1.2%, and metal index was seeing good strength right from the word go. So you have metal index holding on to gains of 1.2%. Realty index managed to snap a 3-day gaining streak, becoming the biggest sectoral loser in trade, while PSU Bank index falling for the second consecutive session, and Nifty Bank actually moving in tandem with the benchmark indices, gaining for a 4th consecutive session. So that's the way how the markets were looking like in today's trading session. Pretty muted day of trade, Snehi. When you talk about the benchmark indices, not much of action, and like you mentioned also, it has been very stock specific.
Absolutely. So that's a quick roundup of what today's trading session looked like. But while we're talking about all the stocks that made headlines today, let's get a sense of what tomorrow's trading session could look like. And on that note, let me bring in our expert on the show today, and that is Richard Jain, lead research at 5paisa.com. Richard, hi, thanks so much for joining us on the show. Give us a quick take of what you made of the market session today, because largely range bound, not much happening, close to but yet far away from 25,000. So what's your view on when we can touch that number on Nifty, and what are the levels you're spotting for Nifty as well as Nifty Bank?
Yeah, hi, very good afternoon. Well, in fact, it's been the third trading session where we have seen some consolidation on the index front, and the markets have not seen any trended phase. So maybe I think there's a global event lined up today evening. So that may be one of the reasons where market participants would be waiting for either breakout on the either side. But the good thing is that in these 3 days of consolidation, the markets have not breached their immediate short-term supports, which are placed on 24,750 to 24,700. So for tomorrow's trading session of our next 1 or 2 days, I think 24,700 would be the very crucial level to watch out. 24,750 to 700 range, if that is intact, then we should see a continuation of the uptrend quite soon. And once we break out that above the 25,000 mark, maybe tomorrow itself, then we should see a continuation of the momentum towards 25,300. So still the supports are intact. It's just a consolidation or a time-wise correction within an uptrend. No signs of reversal yet. So the very soon we may see a breakout of the 25,000 and head towards 25,300. But yes, there is a relative underperformance in the banking space so far. Nifty is consolidating around its all-time high, but still Bank Nifty is far from that previous high which it formed at the start of July. So I think banking is one space where no, we are concerned, and we would wait for a breakout above that 52,200 mark, post which we would see some significant momentum in the banking space. Otherwise, better to go with Nifty in case if anyone is trading the index.
Right. Rujit, thank you so much for joining us on the show. You did speak about the markets and also spoke about the big event that everyone's eyeing out on globally. But keeping that in mind, which stocks do you think will stand to benefit, or which stock one should keep on their radar?
Yeah, hi, very good afternoon. So we are looking at some of the stocks which have recently shown a breakout, and one of them is Asian Paints. So ideally, a good amount of underperformance was seen in the Asian Paints over last few months, but finally, after the price-wise as well as time-wise corrective phase, this stock witnessed a breakout from the recent consolidation today. So I think this is one stock where risk reward is still favorable irrespective of the market movement. In case if we see any kind of higher volatility because of the event, then too I think the price-wise downside now seems to be very limited over here. So one can take fresh longs in Asian Paints over here with stop loss below 2,980, expecting target somewhere around 3,250 to 3,280 range. And second pick would be a buy call in Bharti Airtel. So steady name where we have seen some gradual up move happening. And the good thing is that this stock, when we have seen some minor hiccups, we have not seen any volume-based sell-off when the stock correct. And the 40-day exponential moving average has been acting as a very good support for the stock in this uptrend. So I think that uptrend could continue going ahead also. So one can go long on Bharti Airtel as well with stop below 1440 for potential targets around 1600.
All right, there you have it. Calls coming in from Ruchit on Asian Paints as well as Bharti Airtel. Both buy calls coming in. Ruchit, on that note, we'll let you go. Thank you so much for taking the time out and speaking to us today. Time now for some interesting opinion on the market. It's time to get you the word from the wise. And today, that is Tahir Badshaw of Invesco Mutual Fund to understand the current sentiment and the key sectors that he's eyeing. Let's go across and listen.
Essentially, what will matter is whether we can keep to that 15% kind of expectation. Deliver on that 15% expectation on growth, earnings growth, which the market is kind of focused on, at least from an aggregate level. And I think after some of these events, that is still kind of in the play. We have less to worry about at this stage. We are keeping some things in mind. For example, commodity prices. Can that be something which can probably affect some of these numbers which are likely to come through? But even there, like we have seen some moderation in oil prices. Once again, metal prices, however, have also simultaneously come off after a decent surge in the last one quarter or so. So I think there is less to worry about, and that is probably providing that confidence to the market to move a little more, move further ahead as we start discounting FY26.
All right, on that note, we'll slip into a break on this edition of Your Trades. Stay tuned, because when we come back, we'll talk about all the stocks making headlines. Don't go anywhere.
Hi there, welcome back. Still watching Your Trades on ET now. Let's talk about a stock that was a buzzer in today's trade, and that is BSE. Closed the day with gains of 6%, and BSE was running ahead in today's trade. What was causing this rally? Now, we did hear a lot about SEBI's norms coming in yesterday, and that has a lot to do with why BSE was surging today. And Sharad is here to join all of those dots for us. Sharad, take it away.
Well, yes, to just give you a backgrounder, yesterday there was an important announcement from SEBI regarding a consultation paper for the F&O norms itself, and of course the street was expecting that there would be a pressure coming on the exchanges, but the question remains is why is BSE rallying in the day's trade today? And we did a couple of channel checks, and street is expecting that the NSE is expected to be impacted higher if this goes through. And do remember, this is just a consultation paper, and also they are having higher market share across categories, so the impact might be higher on NSE. Also, broking houses such as Jefferies have stated that BSE can actually offset the impact if it happens, and this trading activity might spill over to its discontinued products. So of course they are having more product lines to fall back to in case of any impact happening. Also BSE is running ahead when it comes to the FY25E volumes which are expected to come in, and especially from the election led volatility, this has propelled the volumes for BSE. Let's look at the numbers, how this pans out, especially the revenue trajectory which is expected over the next 3 years or so. FY24 is just 13% revenue contribution, but it's expected to increase between FY25 to 27 between 43 to almost 50 odd percent when it comes to the contribution of revenue in the derivative segment. Now also there has been an EPS impact analysis for FY26, and this is done by Jefferies itself. The base case scenario is 86 rupees per share, but post weekly BankX discontinuation, if that happens, there would be a downtick coming at almost 79 rupees as an EPS. And also there are 3 scenarios which have been taken place. First is the 15% market share, which is expected to be around 84, but if the market share increases in the derivative segment between 20% or 25%, then the FY26 EPS for BSE might range between 90 to 103 odd rupees. Also BSE has given strong returns to the shareholders. On the 1 year basis, the stock is up 220%, and also on a 1 year basis, or we could say a year to date basis, that's coming at 16%. But of course from April highs itself, the stock has corrected by almost 20% currently.
All right, thank you so much for that, Sharal. But let's shift focus to India March, because that one had come out with these numbers. We spoke to the management, Dinesh Agarwal, who's the founder and the CEO of the company, who's saying that they're working on multiple strategies to increase the subscriber addition. They've also saying that they're working towards more profitable areas. What else did he have to say, and what's his rationale? Listen in.
We have been trying to work out on the churn, and it has been stubborn for us so far. So we are working towards multiple strategies to deal with it. We have the target of going back to our 4,000-5,000, but we are working towards cutting down on the areas which are not profitable, and trying to focus on the areas which are profitable. So we should be able to get back on track sooner than later.
All right, word coming in from the management of India Mart. Let's keep it going with all the management commentary. And we also spoke to Amit N. Mahajan, the director at Paras Defence and Space Technologies. He expects to maintain the current healthy order book, but what's his outlook on margins? Let's go across and listen in.
We have been blessed with more than 2x order book year on year, and that run rate will continue at least for the next 2 years that we can see. We are moving from a component based company to a project and a product based company. So we've had our journey, which has always been beautiful, but from tier 3 to tier 2 to tier 1.5, in some areas today tier 1. These margins are improving as we go ahead. The defense sector, defense and space sector is, if you ask me, is opening up. It is not opened yet. It is opening up. There is big scope of indigenization, huge scope of indigenization. A development-centric market is getting converted into a manufacturing-centric and an export orientation. Now, all of this, the effect on the margins will take its time. And as you can maybe see, the whole Indian industry is now slated to invest into this particular thing, because the margins are going to only look upwards from here.
All right, from one management to another, let's hear out from the management of Renewable Technologies on their earnings, the way forward when it comes to their margins, because they expect it to remain stable or sustainable at around 13 to 15%. Listen in.
Order book stands at 2.1 gigawatt, which is itself is more than double than what we were at the last year. So we need to complete this business in 9 to 12 months. Next 9 months, if you take trajectory, which is the leftover amount of time in this year, the 75% of this is almost like, underwritten and given for the company to perform. Then, you look at our bidding pipeline. Bidding pipeline itself is at 15.5 gigawatt now, 15.5 gigawatt. So even that trajectory is moving in north direction. So directionally, the growth is very significant in the sector. As far as margins is concerned, we have always spoken of margins to be, sustainable margins to be between 13 to 15%. But still, we have performed ahead of our, our own expectations. We continue to remain optimistic between 13 to 15% margin level going forward.
All right, word coming in from the management at Vari, but let's take it across to my colleague Gaurav now, who's standing by with a list of all the other stocks that were abuzz today on the back of their individual news flows. Gaurav, take it away.
Well, yes. First, let's begin with Greenply Industries because there we saw a huge uptick in terms of net profit. Net profit increased almost by 450% on a YY basis. Apart from that, there was healthy numbers in terms of revenue also. That also increased almost by 35%. And as a result, we saw the share also increase almost by 9.5% in a day today. Next, let's talk about Z Entertainment because this company also came up with good set of numbers. Revenue increased almost by 7% while EBITDA increased almost by 70%. We also saw some improvement in EBITDA margins, and that is why we saw this stock also shown some kind of green signs in the share price today. Next, let's talk about rides because when we talk about the numbers, revenue actually declined almost by 10% on a YY basis. We saw net profit going down almost by 24%. At the same time, EBITDA margins went down almost by 24 bips, and company also declared bonus of 1 in the ratio of 1:1, and there also we saw some negative reaction coming up in the stock. Next, let's talk about Crompton company because there we saw revenue increasing almost by 13.5%, net profit increased almost by 25% on a YY basis, and some improvement was seen in EBITDA margins as well, and as a result we saw the stock went up almost by 1.5%. And lastly, let's also talk about M&M because if we talk about the numbers, revenue increased almost by 11%, which was a little below what the street was expecting. Net profit was down almost by 5%, which was in line with what the street was expecting. And lastly, EBITDA margins increased almost by 62 bips, which was a beat on street's expectation. And on back of this news, we saw some reaction coming up in this stock as well. Let's also not forget about Maruti Suzuki because this company also came up with great set of numbers, and after that we saw a sharp uptick of around 3.5% in the stock price. So definitely watching out on all these counters in a day coming ahead as well.
Gaurav, that was an exhaustive list clearly of the stocks to watch out for, but it doesn't end there because you have Tata Motors. I will be reporting their numbers come tomorrow. Shrishti is here to tell us what the street is penciling in when it comes to Tata Motors. Shrishti?
Well, from Tata Motors, we are expecting a mixed bag this time around. Why so? Because on a year-on-year basis, definitely there is a volume push, especially from the JLR division. But on the margin figure, we are expecting some bit of a contraction on the consolidated basis as well as for their JLR EBIT margins as well. If we talk about the numbers then, and firstly on the revenue figure, 1,15,440 crores is what we are expecting on the top line. EBITDA expected at 14,740 crores, while the margins could see some bit of a contraction from 13.3% in Q1 of FY24. This time the number is expected at 12.8%, and that we'll also highlight that because of the product mix, the margin contraction could be there for Tata Motors. If we talk about the profit figure, then 5,486 crores is what we are expecting. Indeed, on a YY basis, that will be a substantial jump. But let's talk about the India business. So India business was also seen to be quite mixed because the commercial vehicle volumes, though they were up 6%, the passenger vehicle volumes were quite stagnant, and because of the mix, we are expecting that on a quarter-on-quarter as well as on a YY basis, there could be some bit of a contraction in their individual margins as well. Now, important to watch is indeed the JLR margins, because for the JLR EBIT margins, the company has been outperforming the street expectations for last so many quarters, and this time let me tell you what the street is expecting. So number is expected at 7.9%, but sequentially that could actually be a contraction of 130 basis points, and that could be on the back of unfavorable product mix, rise in spend, as well as some bit of a contraction in their revenue figure as well. So that's the estimate from Tata Motors. We'll definitely watch out for the management commentary on the guidance and the outlook. But apart from that, any more details on the upcoming Tata Curve launch on 7th of August, it will also be keenly watched out for.
Alright, Shrishti, thanks so much for taking us through that. So Tata Motors, one of the many Nifty companies coming out with its earnings tomorrow, along with Sun Pharma, ITC, as well as Adani Ports, and also Zomato from the broader markets will be closely watched out for. But on that note, I'm afraid we're completely timed out on this edition of Your Trades. From Cheryl, me and the entire team that put this show together, thank you so much for watching.